In the 205th Block Talks, we speak with Michael Carpentier, founder and CEO of Vesta Equity, who tells us how blockchain can unlock the trapped value of home equity. I'm your host, Mauricio Magaldi, and this is Block Drops, your weekly digest on blockchain for business. These news are not a form of endorsement, sponsorship, or encouragement for consumption and are meant for educational purposes only. Alright, everybody, I'm here with Michael Carpentier, who's going to tell us who he is and what he does with blockchain. Michael, welcome to Block Talks.
Thank you, and very big shout out to you for having me on board to talk about what we're doing. So I'm Michael Carpentier, CEO of Vesta Equity, and also the co-founder. What we're doing is we have built out a platform to enable homeowners to tap into their home equity debt free. Because if you look at historically, you look at the space, if you want to access your home equity, you've got to either do it through debt or sell your asset outright. And when you think about that, it's a highly inequitable situation. If I want to stay in my home and I don't want to necessarily sell my home to tap into the equity, or if I'm reaching retirement age and I want to be able to tap into my home equity debt free, particularly if you've been paying off a mortgage your entire life, you don't want to go back into debt. And then what we do on the other end of the spectrum is we provide access to this really sought after asset to investors so they can invest in this asset and partake in the future appreciation. So it's a win-win for both homeowner and asset investor, because for asset investors, it's very difficult to buy into residential real estate. And given its nature that it's very stable, it appreciates, and the structure we've built in and around it, it ends up being a great asset for investors to invest in. And we're talking investors like pension funds, um, private equity, insurance companies that are mandated to invest in stable, solid assets. And what we've brought to this is the blockchain infrastructure, which means we can transact faster, we can cut out intermediaries. Our partners, our investor partners, their capital's never static. It's always earning yield and interest because we're built on provenance and we leverage the yield stablecoin they've launched. It's constantly earning money. Data is immutable, which is really important. Smart contracts can't be altered. So when we work with an investor to build a smart box, build their buy box, it's embedded into a smart contract, so nothing can be altered. So it's really taking this whole concept of home equity, turning it into a leverageable asset for both homeowners and investors, and creating an infrastructure that is great and equitable for a homeowner and a great investment for asset investors to invest in.
That's interesting. We'll go into more detail as part of this kind of financial engineering you guys developed. But I do have to ask, what's the journey that got you here? Like, how did you find blockchain? How did you come up with the idea? What did you do before that maybe led you into this particular sector?
It's a good question. When I was young, I loved real estate, and I kept telling my dad, "Let's work together." So when I was 16 years old, I put together this whole spreadsheet to buy into income properties. And my dad, being a little more of a traditionalist, just patted me on the back and says, "Mike, just go to school and get a degree." I never lost that love of real estate, but I did park it for a while. Went off, got my degree, and did the traditional sort of approach to getting a job and getting into the workforce. I was always, however, inclined and focused on technology companies and marketing. So my background has always been in marketing, the application of technology in marketing, digital marketing, so on and so forth. And I was drawn to blockchain many years ago when Satoshi's white paper came out. It was a rage. I grabbed it, read it right away, and I was like, wow, I had one of those moments. This technology could be applied into so many, I hate to use the word, stagnant segments that hadn't evolved and changed and could really alter the paradigm within these environments. And I saw right away what it could do. I didn't have the immediate reaction that I could apply this into real estate, but I started thinking about it. I went and got my professional designation in blockchain. I took courses at MIT. I read and read and read and read. And slowly but surely, I started evolving this idea that where could we apply this into? What spaces is this going to be really effective to change the model? And it dawned on me that like this is a really good opportunity for real estate because if you look at it, hasn't evolved much in over 100 years. It's still structured the same way. Yeah, they've applied technology into it to expedite things and really favor the financial institutions to make things operationally more efficient. But from a consumer perspective, what have we done? We haven't done anything, right? But here was an opportunity to take this and really make a meaningful change in a space where we could actually help people. I can't imagine what it would be like if I'm 55 years old, all my wealth's in my home. I want to retire. My pension fund won't fully cover everything, and I got to bridge that retirement income. I have to go back into debt, or worse, do a reverse mortgage, which is highly inequitable for the homeowner, or sell it and move. And you've paid off your house your entire life. Why do you want to move? And then you also look at all the people who have accrued high interest debt, consumer debt, student loans. It's a huge problem in the States right now. It's trillions of dollars in student loans. What are they going to need to tap into to bridge or pay off that, or, to sort of realign their balance sheets? And then the other aspect of this, people are turned down for debt focused loans all the time. 40% of Americans are turned down for HELOCs. Even though they got great assets, they're just turned down. They don't qualify. What are those people supposed to do? So we're providing something that is unique in the space right now, and we're providing access to people to be able to tap into their home equity. So it really evolved out of my love for real estate, my love of technology, reading about blockchain, getting hooked into blockchain, seeing all the great use cases with it, and what you can do and how you can scale it is a significant element of it too. So we've built this based on that, and that's how it originated.
That's an interesting kind of sequence of steps. Lots of serendipity there, I assume. But one of the things that usually is a trait to successful founders is something you kind of described a little softly in your tale, is it's these unrestlessness on things that can be solved but aren't. And you had this kind of interesting blend of like long, lasting, passion for an industry, and then you found a technology that could enable that industry to come and just quantum leap into a new era of liquidity, if you will. Now, I'm sure this isn't just, um, rainbows and unicorns. There's a lot of challenges in building in an industry that has been stagnant for decades, that has gone through and triggered global financial crisis in their own right, and where the regulators are always wary of innovation because the last innovation we had, brought the world to its knees. We're trying to avoid, just hurting everybody else once again. So I have to ask, what were the major challenges as you brought the project to life, and how was the process of either circumventing them, overcoming them? Did you just plow through? Did you go around? What's the actual path for launching such an innovation when you're operating in a couple of industries that are almost allergic to innovation?
Yeah, that's a great way of saying it. They are, and for good reason, they're allergic to innovation because innovation can often tear down the infrastructures they've built, and they've made a lot of money off of it. There's a good reason why banks often have the largest office buildings in many cities because they're highly revenues through the roof, highly profitable enterprises. So yeah, they're not keen on innovation very often, but like everything, they can't stop innovation. We've seen that in many other industries where innovation has kicked the leaders off the top of the ladder, and now they're scrambling to try and get back up to the top of that ladder. So big question you've asked there, right? How do you get to that path? How do you build this thing out in that type of environment? So, I mean, it starts, your first and foremost biggest challenge is establishing sort of the business rationale. Does this make sense, right? Testing that premise out. And it started off by us talking to homeowners. We just started talking to lots of homeowners and would you do this, because you've got to overcome that psychological hurdle with a homeowner. Everyone's used to debt. They've been fed debt all their lives. It's the only thing we know. So now you're going to them and saying, hey, you don't need to do it with debt anymore. You can do it with equity, right? Oh, well, what does that mean? Do I sell part of my home out? And by selling part of my home out, am I giving up my rights to my home? Are people going to be able to knock on my door and say, "Hey, I have 2 weeks in your home because I own part of your home. I own 5% of your home. So you have to overcome those hurdles with people. They have to understand what this means, and explain to them, and get them to understand that, and see if is it too complicated for them to get their heads around it. Are they going to start getting sort of embedded into the complexities of blockchain technology, and they're going to start thinking blockchain, cryptocurrency? I don't understand this. It sounds also negative, particularly when we were coming up with this idea. It was all about NFTs. It was all about cryptocurrencies. It was all about sort of the hype of the space at the early stages. So we sat down and had very concrete discussions with many, many, many homeowners to get a feel and sense of, do they get this? Would they want to do something like this? And what math makes sense to them? At what point does it make sense for them to do this versus going out and getting a HELOC, right? So we spent a significant amount of time doing that. The next stage was, let's talk to investors. Is this an asset class investors are interested in investing in? And how do they do it, right? And that was a very, very steep learning curve, because you've got different facets of investors. You've got retail investors, you have institutional investors, and then when you start looking at the institutional spectrum, there's a whole range of institutional investors. There's different asset classes, there's different returns they're looking at. So we had to engage with a lot of investors, and it was a learning curve to figure out the best way to approach this market and how to structure the financial instrument. So having said that, you've established, okay, there is an opportunity here. You've interviewed a lot of people on both ends of the spectrum. Which technology to deploy? There's a whole world of L1s out there. There's a whole world of L2s out there. And every time I open up my computer, there's a new one. Way, way more than I ever expected. I expected it to settle down and to be top tier L1s, obviously, and then a smattering of really, really good L2s. But it seems there's new ones every day. So we went through a lot of research in this regard because the partner you're picking is really, really important. And we did. We made a mistake on the first partner we picked, and that was a really important lesson learned. And now we've picked a new partner, and that new partner is Provenance. And picking an L1 is far more complicated than people realize. It's not just the technology, it's the entire ecosystem they plan to build on that technology, right? In and around the technology. I always refer to L1s and even L2s as sort of micro economies in many respects, because they've got to have an ecosystem built around it. There's got to be utility in and around it. And if you don't have that and you have great technology, you're going to fail. If you have a great ecosystem, everyone thinks you're the hottest thing. There's lots of FOMO in around it, but you don't have great technology, you're going to fail. So get that combination of both of those factors, and that's what we feel we have at Provenance. And they were purpose built for financial services, and they've built on Cosmos, which opens us up to a huge amount of opportunities. We've got a great L1 with them, but as we want to build more bespoke items, we have that flexibility on a great platform. They've also been very, very thoughtful in how they've approached the market and how the technologies they've developed. Um, their utility token hash is a phenomenal instrument. And now they have YLDS, which is a stable coin. And it's the only SEC registered stable coin, which allows our investors and even our homeowners to constantly be leveraging that stablecoin in the ecosystem, and their cash never sits idle, which is something to us that's really important, because that traditional banking system and traditional financial infrastructure, cash sits idle all the time. I mean, you send a wire out for 5 days, 10 days. I've had a long 20 days. Who's earning money off that? Not me, not the recipient. Someone in there is earning the money off of it, and that's again, that's an indication of a system that favors the institution but doesn't favor the users. And I always think a system like that's going to fail. So the technology was the next big element, and in parallel to that, your big obstacle is finding the right team, right? The right people to build this, and then the right partnerships to build it. And those partnerships are critically important to the success of a company, particularly those early stages. And the team, I mean, my team is like the best team in the world. They're just the depth of experience they have in their respective fields, the innovation they bring to it, the commitment they bring to it, has been phenomenal, and it's why we're on the path to success. So then The next big obstacle after that, and this is always the most difficult obstacle, is capital. You need money to make things move, and that's a tough task because you've got to talk to venture capital firms who have very specific business models by which they gauge and judge businesses, or sometimes they don't even have that. It's a little more fly by the seat of their pants. But the reality is that they need to be convinced that this is a model that's going to give them the type of return they have promised their LPs, right? And that bar can sometimes be extremely high. Then you also have angel investors who are, you know, without question, smart individuals, but they're not necessarily professional investors. They're not a venture firm. So you got to start having communications with these disparate groups. I mean, disparate. They're geographically disparate. They're focused on different segments. You got some on fintech, some on blockchain, some on prop tech, and some do all three. But you got to communicate with them in a way that they understand and convince them, hey, we're a worthwhile investment. Got a great team. This is the plan, yada yada yada, as you move on down the path, and you got to get them to invest in your business, and that is a very, very difficult task. Probably one of the more difficult tasks when you're an entrepreneur and you're starting a business. It's hard to get people to part with their money, for good reason, but it's very, very hard to do that. We had an added element to that, is that these these equity purchases have to be financed. And you're talking equity purchases as an aggregate can run into the hundreds of millions of dollars. So the other element you have to bring into our business model, it's an extra layer of complication, is you have to bring in a capital partner to fund these things. And they essentially end up being your business partner in that respect. And that is a significant undertaking, is to convince them. Now, fortunately, we have a chief investment officer with 25 years experience in the space, knows a lot of people, brings a lot of gravitas to the role and to our company. And we've been able to get those partners to the table with us and have those discussions.
That's one of the reasons why when I think about projects that are blockchain based, I never think about them as a product or a platform. It's always like an ecosystem because the blockchain, as we used to say, like in the early days, it is a team sport, right? You have the token holders, you have the miners or the validators, you have the technology builders, smart contract developers, and the business people and the product people and the designers, and I think that there's such a diverse type of talent that it requires that it's really hard to pull together, but when you do, it's really magical what that diversity of people can achieve jointly. So really happy to hear this in your uh, particular story. Now, one of the jokes I've been making recently is that if you 10 years ago told me that I would be excited about regulatory progress, I would laugh at your face. I would fall off my chair
Yeah.
mocking the hell out of you, because why would I care? I'm trying to just break away from the system. That's why we're in crypto. And all of a sudden you have stablecoin laws being passed, and um, code is free speech, so it can't be impaired or subpoenaed. And we have this new understanding of the decentralized paradigm by the people who are, without a doubt, going to be disrupted by it. They don't know yet. They're trying to make sense of things, but decentralization doesn't require central authority. So I have to ask, in that story, you haven't brought up specifics on regulation, but I know that finance and real estate are heavily regulated industries, especially in the United States. So, in your experience, what was it like to live across this almost like two different eras of regulatory appetite towards blockchains in general as you built the business?
Yeah. So we made a conscious decision at the very early stages that we would end up being the poster child for going above and beyond whatever regulatory requirements exist in the marketplace. Because there is some ambiguity in our space, particularly around home equity investments. It's not rated as debt or regulated as debt, and it's not necessarily regulated as a real estate transaction. So you've got to balance that into the equation, right? So if you want to not run afoul of anyone feeling they're getting sort of mishandled, and they've been brought into a deal that they don't feel is fair after the fact, you have to build everything and around that sort of understanding that we're going to approach this in a way that a is very fair to the homeowner, and that was one of the criteria too. I mean, with the capital partners we're working with, we've been very happy to see how concerned they are about that part of it too. They don't want to put deals out there that are inequitable and unfair. They want to put deals out there that are meaningful and do good for people while they can still make money. So that consciousness has sort of been hardwired into our thinking as well. And the things we're doing, because we're building on blockchain, is because an advantage is that we update sort of the price of the home on a very regular basis. We have our data providers writing right to chain, and by writing right to chain, that's updated data that the investors would never have gotten on a regular basis. And the homeowner constantly sees their position, right? Because we're building on chain, we enable the homeowners to be able to buy out whenever they want. If they want to buy some equity back, they can do it because our cost of transactions are so low. If they want to buy back 500 bucks, they can buy back 500 bucks. We've built it that way. And where we do need to register, and if we do register as a debt company or a mortgage company in states that we do, we'll register as that. We'll comply with that law. If we have to register as a real estate broker in a specific state, we'll do that. But you take a state like California, and neither are required. But we may decide, let's register as a real estate broker anyway. It's not required of us, but let's do it, right? Let's make sure we're above what the standard is, and create transparency. That's one of the things about, we're 100% transparent. Everything's on chain, right? So everything that gets transacted, all the underwriting data, all the information that needs to be on chain about the homeowner, in a sense that yes, the homeowner has agreed to this. The homeowner, we don't give the specific details and stuff, but all the elements they went through, it's all on chain, right? So the investor knows this has all been cleared. The homeowner knows that they've approved all this, and they can go look at it whenever they want. So by bringing in that transparency, we're sort of elevating the bar and saying, hey, we're up here. We're being compliant. There's nothing more compliant than truth and honesty, right? You can't hide behind anything when everything's on chain that's relevant to the transaction. The other things we do is we have a buyer's remorse period. So when someone says yes, they're going to do it, we give them time to say no, stuff like that. We take them through a very simple, fair process. No one ever says, hey, this is the price of your home, take it or leave it. You don't like it. It's up to them. If they don't like what they're seeing, we're not going to hold them to it. We're not going to pressure them into undertaking this. We're very clear from the onset how the structure works. And I think you take that approach, I think you're creating a better business model for everyone involved. It's not just the investors, but it's the homeowners as well, and it's society as a whole. And I think that's always been a problem with more traditional infrastructures, is that transparency typically hasn't existed. Even for investors, the buy box is not embedded in a smart contract. So what certainty do they have that every contract that comes into the fold in any particular type of business dealing meets the buy box? They don't, right? So with us, that's immutable. It's in a smart contract. It can't be altered. So there's all these elements we're bringing to it, and our position was to be at the forefront of and take a leadership position when it comes to anything from a regulatory perspective. And of course, when we take these assets through to securitization, 100% compliant with all the securities laws.
It is a point in history where if you're trying to innovate using blockchain, you're kind of forced to be the holier than thou player in the industry. Even if you have non-blockchain competitors, there will always, especially if you're using like in your case, you're using Provenance, which is a public layer one. They have a token. They are in the Cosmos ecosystem. They're going to be seen as a crypto infrastructure, not just like vanilla blockchain as we once had in the quote unquote enterprise blockchains. Thankfully, that era is over, and we're now looking into permissionless public chains with different capabilities to support each use case. We're entering this app chain era, which to me is a little bit confusing because um, I don't know how many chains do we really need, and it's a bit puzzling to me still. Just trying to figure that out.
You and me
But
both.
definitely, yeah. So definitely one in the regulatory space that needs more attention. If you are a blockchain based business in a regulated industry, they will have more inclination to scrutiny than otherwise. So interesting approach. And I've seen a few other cases over the years doing the show where the regulatory license or regulatory compliance, because we are when we are, comes out as a strategy. It's a strategic differentiator. And because you are blockchain based, there's now two differentiators, and that gives you a leg up against the competition because you are, more liquid, more transparent, but you're also even more attuned with the regulation than your, next peer. And in the end, this is for what we like to call responsible innovation, makes the whole industry better. And then people realize, well, maybe I should be doing this as well because now I'm going to get, you know, my opportunities just captured by somebody else because they have better handle on compliance, they have more transparency, they probably can provide better yield across the entire asset life cycle, and I'm here doing paperwork. So I think that's a massive uh, I think it's an understated advantage of having a crypto or blockchain based business because most people who are innovating with responsibility will go, as you said, above and beyond and make it a better industry altogether. And I love that this is the industry we're starting to build. And maybe that's why I get excited with new regulatory progress.
Yeah, I mean, by its very nature, the technology's transparent. So by its very nature, it's almost regulatory compliant, right? It's very essence of what it is. If you go back to Satoshi's white paper, the whole point of it was to say, hey, let's make a better system that's better for people. And a better system that's better for people is going to be inherently compliant without the regulatory oversight from government. It just is naturally regulatory compliance. It's in its DNA to be that way. I mean, anything can get abused. People say, well, look at this, look at that. And I'm like, well, anyone can abuse anything. People say, oh, it'll be used for money laundering. And I'm like, the biggest thing used for money laundering is the US dollar.
You know what
So,
else is used for money laundering?
yeah. So,
It's not clothes. It's not clothes.
yeah.
It's not soap.
Exactly. So it's like, it's just a reality. So I think, yeah, you're dead on when it comes to that assessment. Yeah, for sure.
And one of the things that you mentioned that I really like is that the stable coin that kind of creates the grease of your life cycle is a yield bearing stable coin, which to me is one of the, I mean, me being Brazilian and understanding FX at an early age because we had to. Um, it's really interesting that the stable coins became this interesting US Treasury derivative that most people in the world didn't have access to US Treasuries. That was a fact. Now, especially with centralized stablecoin issuers who are pegging the dollar through a T-bond mechanism, what in essence we built as an industry is an indirect access to Treasury, US Treasury, which very few people had access to, and now everybody has access. If you have an internet, you now have access to treasury on the shape of a stable coin. Granted, some stable coins don't offer yield; they keep the yield, and as you were describing, they play the same role as the banks of yore, where we're holding on to your cash for a couple days for float, and nobody told you the float is that they are monetizing your cash while you're not, which is what the non yield bearing stable coins do today. But more and more stable coins are starting to entertain that, knowing that their adoption can become easier if they can share, even not even the entire yield, but share the yield with the holder in a programmatic way, because now we can program those things, right? So the change from static money to programmable money is like a few generations of advancement, and only now, people like you can build around it, because that's where we are. What was How was the incorporation of that into the life cycle of the real estate asset? How did you decide to move with a yield bearing stable coin? How much to gauge from the returns on the yield between the protocol that you built, the homeowner, the investor, or any other liquidity provider in the ecosystem? How do you decide? Is this centrally decide? Do you have like a voting mechanism from participants? How do you manage those variable parameters around the economics of the solution?
Okay, so just so we, YLDS is a provenance stablecoin, right? It's not our own stablecoin. So the had always been ingrained into the business models that we needed to use a stablecoin to enact transactions, right? Go from fiat to stablecoin because everything we deal in is US currency. And we need to be able to enable people to go from their US dollars into a stable coin so that it's priced comparably to the asset price, which is valued in US dollars, and keep that consistency and that simplicity in a flow of capital. So when we started, as I mentioned to you, we tried other blockchains. Those were not great because they didn't have their own stable coins. There was complexity in working with USDC and yada yada. Not that I have anything against Circle. I think they're a great company. But there's just levels of complexity. So when we started looking at a new partner, one of the things was like, do they have a stable coin? It's like, how can we leverage that stable coin into our ecosystem? Because we need it. And at that point in time, when we were talking to Provenance, they were on the cusp of launching YLDS. And for us, that was a game changer because suddenly we had something that could grease the wheels of the transaction wheels and would at the same time ensure our investor and homeowner capital never sat idle for a moment. Technically, someone could get their home paid in yields and they could just leave the money sit in their wallet and it accrues interest on an annual basis, right? I'm being very, very simplistic in my interpretation of that. But that again shows how your capital is your capital. And yeah, you're giving up something for it, right? Which is normal in any types of transactions, but now suddenly you're earning something on it. Your money's not sitting there. I mean, how many people have their money in a checking account and it just sits there and they get no, in fact, they end up negative when you think about it because they're earning no interest and they're getting charged fees every time they do something. That's not the way things should work. That's your money. It's not the bank's money. You're giving the bank to hold it, and that should be where it stops. If they're holding your money, they should be giving you something for that. So from our perspective, that's how that worked. The economics behind YLDS, I can't speak to that. I don't know exactly. And that's not my area of expertise, how they've structured it and how they manage that from their perspective. But we know it's a great element to that blockchain because we know how we have to apply it in our ecosystem and why it plays a role in our ecosystem.
I understand this is a centralized business running on a decentralized infrastructure, and by and large, by playing to those strengths, ultimately you will see the decentralization of businesses. Is there any plan or roadmap or ambition to bring more of the community influence and turn Vesta into more of a DAO? Is this something what have you weighed in the pros and cons of going into that direction?
We have. It's been all sketched out. I mean sketched out, it's been sketched out in way more detail than that. It's something that we want to do, but it's down the road. It's something we you have to I'm always fast to try and go to the technology. I love the shiny objects. But you have to iterate before you get there. And if you don't iterate before you get there, you're potentially creating just an absolute disaster. And what we want to do is we know where we want to go to the top of that mountain and we're on that journey to the top of that mountain. The top of that mountain one day will be a highly decentralized platform where the community is actively involved, community's building it out, and it's evolved well above and beyond anything I could possibly imagine right now. We're not building something just for now. We're building something that we feel is going to have long-term viability, long-term legs. That is, our line is live in prosperity, and when you think about that term, live in prosperity, what does that mean? That means creating an ecosystem where all can prosper, investors, homeowners, and take an asset class. I mean, just residential real estate alone is $278 trillion. That's the value right now. That's a lot of capital. Most of it just sits there. It's not used by anyone. It just sits there. It appreciates, but it just sits there. No one puts it to work. Imagine if that capital were unleashed into the economy, what it could fund, what it could do. You could have homeowners that are backing venture cap firms that would normally be backed by venture capital firms. They could be funding innovation in space technology because that's $238 trillion. That's 134 times larger, and that's just residential. It's 134 times larger than Bitcoin.
I like the vision that tokenization is a big capital unlock. We're definitely seeing this with stablecoins and especially in cross-border payments, but with private assets like real estate, it's just uncharted territory. We'll know much better as these thing progresses. Because this is kind of a 24/7 365 industry, we tend to kind of overlook a lot of more personal aspects of life. Do you have any routine for keeping yourself healthy and trying not to die out of FOMO?
First of all, you need to take care of yourself, from a health perspective. And I eat extremely healthy. I exercise like a demon. I do ultra marathons, obstacle course races. You need a great team that you're working with, and there's got to be a lot of good synergy between that team. Like my teammates are like my brothers from another mother. We trust each other. We work hard, and you've got to enjoy what you're doing. You really gotta love the hard work because you believe in the vision of where you're going. Because it's a lot of hard work. I mean, you can drive yourself crazy, right? And you've also got to make sure you stay focused because it's easy to chase any little trend that's coming along, right? You got to stay focused, believe in your vision. You're going to have a lot of people tell you, don't think this is going to work. This is a stupid idea. What are you doing? Blah, blah, blah. If you believe in it, stick with it. You'll prove yourself right. Don't be afraid to pivot based on facts and realign where you're going. And we've pivoted plenty of times. And you have to be prepared to do that because I said to you, you've got that shiny flag at the top that you're aiming for at the top of the hill. The path is not defined. You got to be prepared to take different routes up to that flag. So you got to be orientated that way and think that way. But you got to have that balance in your life. And it is a tough journey when you're an entrepreneur. You have to work hard. It's without question one of the hardest things I've ever done because you wake up in the middle of the night sometimes in a cold sweat going, what the hell am I doing? I've got friends that are, doing this and doing that and traveling and having lots of fun at this stage. And here I am building a business, working my butt off 24/7.
As I mentioned earlier, I think you only get to that route if there's a problem that you see that can be solved and no one is doing that. And you're like, I'm going to take this on my own bare hands and I'm going to just make this thing work. In most cases, this is the trade off, right? It's the passion for, maybe comfort and tranquility. But what you're actually doing is you're just moving forward sometimes decades a day when you're building something that is, that disruptive. And we're all lucky to have people that are in that particular area of the world and just pushing things forward, and that's how we get to enjoy progress as a society. It, in this particular area of progress, regulation, evolution, what do you think is the one thing in the industry we should fix right now to avoid building another 10 years and realizing, oh, we didn't fix this one thing and we're still, in square one? What is that one thing and why?
At the end of the day, this is about consumers, right? And everyone's technically a consumer, and by that definition, I mean a user, right? If you hype up on the technology too much and the sort of the periphery speculative elements, you're going to kill this, right? It's not to the consumer. It's not about Web3. It's not about blockchain technology and the users. It's about a better way of doing things. And I think that's how the technology needs to be packaged, and it needs to be conveyed that way, and it needs to be demonstrated that way. There's got to be great use cases. If we fail to do that and we make it too much about the fringe and the speculation and the complicated sort of outcomes that you can get from it, if you've got like a 6 PhDs in mathematics, this technology will never go anywhere. There's got to be really good use cases, and we have gotten really close to that on many occasions. Before the last crypto winter, you couldn't swing a cat every day without hitting some stupid business idea that got funded at the yin yang, and you're like, what the hell? This is not helping anyone because it's stupid. At the end of the day, it's going to fail, and a lot of people are going to lose money. So I think that's the one thing we've got to make sure we stay on course with, and we got to ensure that we don't fall down that black hole or rabbit hole, whatever you want to call it, because it's a means to nowhere, and it'll all fail because of that.
That particular section of the cycle was a combination of two very bad things we have in human nature, which is greed, sheer greed, and stupidity. Like when they're alone, they're manageable, but when they're together, they're damaging. And we lived through that in the last, bears. What triggered the last bear cycle was greed and stupidity in many layers. Don't get me wrong. I'm not just saying that it was crypto alone. There were many things that were adjacent to crypto that were greedy and stupid, and it ended up hurting crypto. So, but I hear you, and I think just with the example you gave of being holier than thou, way above the current accepted standards in terms of regulatory compliance and transparency and seriousness and really work ethic. I think it's how we start to break apart and break away from that particular combination of human traits that we want to avoid combining. But absolutely.
You're right, though. I mean, you alluded to the last financial crisis, 2008. That was greed and stupidity. It had nothing to do with blockchain. Blockchain wasn't even on the horizon really at that point. It was just greed and stupidity.
It's funny to say this because right now, because that crisis triggered the event that created Bitcoin, we don't have the right to mess up the way we did then. We don't like we do this, we might as well just pack our bags and go sell coconut at the beach. If we provoke a crisis in the magnitude that created Bitcoin, we're all to blame. It's irresponsibility to the highest degree. For the people that are non-chainers from your past life and call you, hey, you're doing great, Michael. I want to. Bitcoin is the new all-time high. I want to learn how to get into blockchain too. Do you get those calls, and what do you tell them? How do you onboard them onto the industry?
I generally don't get people calling me up specifically about a particular type of crypto investment, but I do get people who want to get into blockchain. Like they're curious. They're like, how's this technology work? How can it be applied? And my first starting point with people is you just start educating yourself, right? You got to start reading. You got to start understanding how the ecosystem works. You got to listen to podcasts like this, right? You got to get out there and start informing yourself because it is going to be a massive shift in how people use money, make money, um, compared to where they have come from, what they've learned, what they've been taught in school. It's a complete shift, and you need to be able to understand that because it's not going to be you going to the bank anymore and withdrawing money when you need it. It's going to be fundamentally different. You are going to be sovereign over your own money. You're not going to need to rely on a bank for your money. You're not going to have that. You're going to have complete sovereignty over your own money. Just like I hope we have sovereignty over our own ID. That to me is where this needs to go, right? So I tell people, like, read, learn, do what I did. I mean, I was technically inclined when I read Satoshi's white paper, so I had the fundamentals and the understanding of what he was talking about, but I still had a lot to learn, from that point on. And I picked up, God, countless books, did countless courses, got my professional designation. Now, not everyone has to go that far, but you need to do that to educate yourself.
Education is key. I fully subscribe to that. Absolutely. Listen, man, we're about done. We're way past the time that I promised you I would let you go. But this was really good. This was fun. How can people keep track of what you guys are building? Where to find you? What's the path there?
So they can follow us on our website. Go to www.vestaequity.net. They can follow us on Twitter, and our handle's at Vesta Equity VPM. They can also follow us on LinkedIn. They can also follow me on LinkedIn. And if they ever, I'm happy if people want to email me, they can email me at mcarpentier@vestaequity.net. Very happy to talk to people. I'm not one of those people that don't respond to emails. I respond to almost every email I can. And yeah, I'm always happy to talk to people. So
Awesome. Michael, thank you so much. Thanks again. It was a pleasure learning a little bit more about you and the work that you do. And if you're in any crypto conferences, maybe we'll bump into each other in the real world.
absolutely, I would love that.
Thank you. Bye for now.
Thank you.
Catch us online. We're on Instagram at BlockDropsPodcast, on Twitter at BlockDropsPod or 0x Mauricio. We're on Lens at blockdrops.lens. We have a newsletter on LinkedIn. Write to us at blockdropspodcast@gmail.com, and you can listen to the BlockDrops podcast at Spotify, iColab, Faberbun Tech, and all of the other major streaming platforms. Yay! Shout out to Michael for such an incredible view on the value that is unlocked on real estate equity with blockchains. Also, shout out to my friend Anthony Day for setting up this interview. And don't forget to leave the ratings on your favorite player and check out the merch store at blockdropspodcast.xyz. This is all for today. Stay rare, stay weird. LFJ.